Hello everyone, again this is Gilbert Jalad. I'm talking to you here from CPLS headquarters. This is Tufts on Tax. We're back again to discuss more taxes with Mr. T. Scott Tufts. He will answer all your questions, anything you have problems with, lawsuits, with family, with friends, with the IRS, anything you have trouble with taxes, he will answer for you. He is the master and the expert on this matter. And you can always call him at 877-647-7887. That will be displayed on the screen. And also you can go to cplspa.com or email him at stufts@cplspa.com. That would be stufts@cplspa.com. Mr. Tufts, as we all know, and we mentioned this before, he focuses on how tax forms and other issues impact people's daily lives in ways that are often overlooked and unknown. Certain tax forms like the Form 1099 NEC or Form 1099 Miscellaneous or Schedule K1 Form 8082 and so on when it's filed and what can lead to litigation. Hello Scott, how are you? Welcome back.
Good to be with you.
Good to be with you too, as always. And today it seems like we're gonna touch a very touchy subject here. We're talking about the federal tax law changing in 2021. More changes happening in our life, like as if we want more changes, and now it's happening in taxes. Now, of course, there's a new topic and subject, how Biden's tax policy changes could affect us. So I'm gonna move this to you and give us an insight on what is happening and how is this affecting us.
So, Gilbert, when the new administration and the policymakers look at changing our tax laws, they might tweak it in a way that would make sense to many of our listeners. So, for example, if you're in a higher income bracket, let's say in excess of $400,000 in a household, you might look at tax increases coming your way. If there were previous efforts to kind of curtail some of the itemized deductions that were for state and income taxes and property taxes, you might expect those to get loosened up, and that's a good thing. There may be changes to the what we call the beginning RMB, required minimum beginning date for IRAs. They might push that back. We have to take a look at that. Now, one of the things we're also looking at, though, might be your annual gifting. It's currently $15,000 a year that folks can do without, as part of an exclusion. That might be scaled back to $10,000. We have to keep an eye on that. We have to look at the estate tax. It roughly at over $11 million per person. There's really only, at a much higher level, that might come down to $3.5 million. So if the estate tax comes down, that is going to affect folks. We might see changes in the capital gain rates or the way they go about capital gains. Also, as the way you inherit assets, there may be changes made to the way that you have basis in the in assets that you inherit. So a lot to think about as we go forward, and we think many of these ideas are going to get implemented. And so here we're going to try and get word to our listeners as part of the overall presentment of the forms and how they're impacting people's lives.
So you just mentioned the changes briefly about the estate tax, excuse me. And so there's also change in tax rates, as I understood?
Right. So at the highest levels, the changes will come in at the income tax rates. And what they would do there is get you into the higher bracket of rates under our system at a lower level of household income. And so what you would expect to see there would be folks at, let's say, a higher level of household income of $400,000, they might face a higher tax than they do now.
I see. So they have a list of requirements.
Well, yeah, so it would go up to the highest rate back to 39.6%. whereas it had been reduced, and at the low, and at higher income levels, that would be reduced to get more taxes coming in.
Okay, and I see also Social Security taxes?
Yeah, so one of the things that I keep an eye on is, you start looking at what comes out of your paycheck, and you look at the way that the tax is composited or put together. If you really break it down, there's a Social Security tax has two components: the old age survivors and disability insurance at 6.2% and a hospital insurance tax at 1.45%. When you combine those, then that half comes out that the employer withholds, and then the other half is your portion that comes out of your check. And so what you'd want to be thinking about is, are they going to tweak that to allow for a larger amount to come out of paychecks to subsidize or support the Social Security Administration and preserve the solvency of the Social Security Fund? And so the way they might do that, Gilbert, is if they currently have a cap at a certain level on one of those component parts, they would release the cap, and then that means that folks who make a larger wage would contribute more, and they'd get that out of the larger wage earners.
Wow. And the capital gains?
Yeah, so capital gains is something we're also taking a look at, because the rate can be something that be altered. And so what we look at the proposals now is that, will they change that lower capital gain rate to a higher at the highest income tax rates at a certain level of income? And so currently the capital gain tax being at a lower rate, roughly 20%, and then you get into where it will get to the higher brackets at 39.6%, or even higher when you put the net investment income tax. So again, what we come back to, Gilbert, is the idea that the higher income levels, the current the expected policymakers' decision will be to go ahead and try and tax the higher income earners and deprive them of the lower capital gain rate.
Wow. So why are those laws changing right now? Is it because we're under a new president, or is this change been, in the plan before?
No, I think it's a different philosophy. I think the current administration and the policymakers there perceive that at the higher income levels, more can be done. One of the things we look at is, are those that make more empowered to hire the professionals to avoid paying the tax? And then therefore, there's the sense that if you then extract more tax from the higher income levels, they can afford it, they being the wealthier. So what we look at in these situations is a different approach. Some folks say, well, if you tax them more, they'll pass it down through to you, or they'll find ways to avoid it, and it's really not going to incentivize them to create jobs. That would be the prior approach that was taken. Now, I think we're going to see a change where they're going to say, yeah, but more can be done at the higher income levels, more taxes can be paid, and quite frankly, with all of the stimulus and all of the things, we need to tax more because they need the money to run the government, or you know what I mean? And so if you look at government as a business, which not many people do, it's got to run a profit, or ideally not a deficit, so it's got to get more taxes in.
Yeah, and they have a high deficit at this point. And I was wondering about that they will find ways to get that money back,
right,
that they paid to people.
Well, one thing, I think we can expect to happen also is enforcement. I do think they're going to have to bring the IRS and the revenue collection up, and that's going to be tough on folks. So I think when we see higher tax rates and a higher level of enforcement, then folks are going to have to deal with that.
And I wanted to ask you now, how is this going to affect us? I guess it depends on who you are. What is your situation? Does that matter?
Yeah, so smaller business that has a pass-through nature to it. We've talked a lot about the K-1 and 1099 folks. I think you have to look at, when we say small business, maybe we're talking about the small business owner who makes more than $400,000 or their household makes more than $400,000. I think they're going to feel the pinch if this is what's coming. Whereas those making less than $400,000 in the household may not be affected quite like this. Also, your larger estates, and we should expect that the estate tax is going to be greatly altered to bring in more money.
So those are the people that should be concerned about all this change because it will affect them deeply.
I think so.
However, the other people are under 400,000, not so much to be concerned. Basically, they will be gaining versus.
Yeah, I think the lower income levels should not be as concerned. If you're below that 400,000 threshold in a household, you're probably not going to feel this as much. Although you may be indirectly impacted if changes happen at the business level, and or in an inheritance situation.
Absolutely. I mean, I know I don't want to get into politics and both sides and the right and the left, but is this beneficial? You think this is opening a good future for our economy?
Well, that's a good question. I kind of look at it this way. I think if we continue to believe that a complicated tax system and the type of resources that are needed to administer a complicated tax system and a tax system that punishes certain behaviors and rewards other behaviors, I think as long as it continues to operate in that kind of way, I don't think that's good. Even though I benefit from it in the sense that I have to advise and handle it, I think, truth be told, a simplified system would be better. Putting more money in the citizens' pockets is better. Letting folks do more with their money is better. Our tax dollars being more accountable would be better. I'd like to see more and more initiatives where the government accounts for what it's doing to the citizens and the taxpayers. I'm kind of that kind of person. I believe that our tax dollars should count and be accounted for, no different than business, and reporting to the shareholders. So I'm kind of look at it more that way. But I don't have a great level of confidence that that's going to change anytime soon. And I think if that's what you're asking me, I don't see enough of those folks in power or heading into power that are going to greatly change the system as it is currently, and at least in the short term.
Of course. So now that we covered all this, what cases you are expecting to come to you with all this change? What are the issues that people will come to you and ask you to help them regarding this matter?
I expect there to be a number of cases arising out of the virtual currency area and Bitcoin, and the effort for the law enforcement and tax collectors and revenue enhancers to be really looking hard at that. There's inherent capital gain and other such taxes inside all of that. I expect that to be a big push. I expect complicated structures to still be an issue, and what I mean by that is your K-1 connecting multiple layers of entities, and I believe that that's going to be something that I expect to come to me. I expect the family dynamic and the difficulties among families between trusts and beneficiaries and business structures, and now with the estate tax potentially being lower, I expect all that to make it a messier thing. And then I expect that with the elderly and this wealth that will accumulate through that if they tweak things in ways that we're not expecting, or that we've not experienced in some time. For example, if you have a carryover basis at death instead of a step up at basis, I just think all that's going to add to the turmoil, if you will. And so I expect to get calls on that. And then last but not least, I would expect that in these complicated structures, there will be folks who wish to come forward and blow the whistle, so to speak. And one of the things I like to do is help people decide, is it good for them? Is it the right thing to do? I don't believe everybody should be in a position to blow a whistle, if you will, if they're not up to it, because when you blow a whistle, you don't have very many friends, and you better make sure you're doing it right, and you've got to make sure that what you're presenting is accurate, because you wouldn't want to have inaccurate things presented, maybe. So I think all that's going to play in, Gilbert, and so I expect folks to come to me that have these complicated structures. One last thing, the international markets, and we talked about it last season, the K1, K2, K3, I expect the international markets to get more and more complicated as we still have our worldwide tax system. So folks will get caught by that, meaning more and more international situations will arise.
A lot of things to keep in mind and, to think about. And I'm sure we will continue talking about this all along, because these changes are happening, and you're going to get cases according to that.
We'll work them in, Gilbert, to kind of our presentment, and also we'll bring some of our colleagues here to talk about areas that they are in, and then we'll see how that overlays with our tax system and these forms and how litigation can arise. So I look forward to this coming season and getting out in front of these issues and helping folks know when they need to make the call. Essentially, we're the red phone. When the accountants and the lawyers out there and our listeners are otherwise unsure of a complicated tax part of a controversy or where a dispute arises, I want them to pick up the phone, essentially, and get to us and see if we can help them.
Absolutely. You heard that, everyone. Tufts On Tax. You can contact Mr. Scott Tufts at stufts@cplspa.com, or you can call him if you have an issue related to this subject, what we talked about today, about the federal tax law, or any other issues concerning your taxes, any lawsuits, any problems. Call him at 877-647-7887. Again, email him at stufts@cplspa.com. You can visit our website, cplspa.com. We will come back every week and discuss tax issues. If you have any issues or any problems or any concerns, don't hesitate to call the expert, T. Scott Tufts. Thank you, everyone, and we'll see you next time.